Okay, let's unpack this. Welcome back to the deep dive. Today, we are strapping into the Cybertruck, metaphorically speaking, and heading straight for Austin to analyze the 2025 Tesla annual shareholder meeting. This really wasn't just another quarterly review, was it? It felt like a major strategic reset.
Oh, absolutely. It felt, less like a standard corporate meeting and much more like some kind of futuristic manifesto. Our sources described a really dramatic scene. You had dancing humanoid robots, pretty intense pink and blue lighting. It gave the whole thing this sci-fi vibe.
Right, and the management team, they leaned right into that. The big message, the one they kept repeating, was this idea that it's not merely a new chapter of the future of Tesla, but a whole new book.
Yeah, a whole new book. And they've actually updated the company's mission. It's not just about accelerating sustainable energy anymore. It's broader. It's about achieving sustainable abundance.
Sustainable abundance. Okay, that sounds like a pretty fundamental shift.
It is. And that new mission, sustainable abundance, it's really the key to understanding, well, everything else that came out of the meeting. So our goal today is to cut through some of the hype. First, we need to look at the actual financial structure of that huge CEO pay package.
Your record-setting one.
That's the one. And then we need to map out how Tesla actually plans to shift its whole identity towards AI and robotics to, well, try and achieve that abundance.
And when we talk about that pay package, the numbers involved are just staggering, almost unprecedented. This vote felt like maybe the highest stakes governance decision of the year, right? We're talking potential awards hitting $1 trillion.
Yeah, it's pretty wild. So let's dive right into section 1, the pay package and that big governance vote.
Okay.
So the headline result is pretty clear. Shareholders approved the 2025 CEO performance pay package, and they did it overwhelmingly. Over 75% of the votes cast were in favor.
Wow, okay. So strong support there.
Very strong. And this structure, it relies on hitting 12 separate tranches, blocks of stock options. If all those milestones are met over the next decade or so, it could genuinely be the largest executive payout ever awarded. That top-end valuation gets you to that almost mythical $1 trillion figure.
So what was really being decided here? Beyond the money, it felt like a referendum, didn't it? Shareholders were basically asked, do you still back the CEO's long-term vision, especially this new AI and robotics focus, given all the controversy and just the sheer size of this payout?
Precisely. That's exactly it. You had proponents, people like Cathie Wood, influential voices, arguing this is the ultimate pay for performance. They're saying it's specifically designed to reward, well, moonshot-type performance. The idea is the CEO only gets this massive payout if the average shareholder also sees a huge, generational return on our investment.
Makes sense from that perspective. But there is significant pushback too, right?
Oh, definitely. Critics, including major proxy advisors and big institutional investors like Norges Bank, Norway's sovereign wealth fund, they voice really strong resistance. They pointed to the astronomical size, obviously, but also serious concerns about dilution of existing shares.
And their argument was?
They argued it wasn't just pay for performance, it was more like pay for unchecked power. Because if the CEO achieves the full package, his ownership stake could jump to nearly 29%. That's a huge level of control.
29%. Okay. So to actually unlock that potential payout, what does Tesla have to do? What are these milestones?
Well, they're targets that basically reshape global industry. Let's look at the financial ones first. Tesla has to reach an $8.5 trillion market capitalization.
8.5 trillion, up from what, about $1.5 trillion now?
Exactly. It's a colossal leap.
Yeah.
And alongside that, the company also needs to hit $400 billion in adjusted EBITDA.
Okay, $8.5 trillion. And just to give people listening some context, that's like almost the combined value of Apple, Microsoft, and Saudi Aramco today, isn't it?
Pretty much, yeah. They're essentially betting they become the single most valuable company in human history. That's the scale we're talking about.
And the EBITDA target, $400 billion. Remind us what adjusted EBITDA is again, and how does that compare to now?
Right. So adjusted EBITDA, that's earnings before interest, taxes, depreciation, and amortization. It's a common way to look at a company's core operating profit. They need to hit $400 billion a year. Last year, they reported around $16 billion.
So a massive jump, more than 20 times increase.
Exactly. It basically requires a complete shift in their business model. You don't get there just selling more cars.
Which brings us to the operational targets, I guess, the things they have to actually build and sell to justify those financial numbers.
Right. And those targets confirm the shift away from just EVs. For those 12 tranches, we're talking about huge progress in totally new areas. Things like selling 1 million Optimus humanoid robots.
1 million robots.
Yeah. Achieving 10 million active full self-driving subscriptions. That's a lot of people paying monthly for FSD. and putting 1 million robotaxis into commercial operation.
Okay, so robots, FSD subscriptions, and robo-taxis. That's the core of the new book.
That seems to be the plan. And we should probably quickly mention a couple of other results from the shareholder meeting, too, on the governance side.
Yeah, good point.
There was this non-binding proposal asking the board to invest in the CEO's separate AI company, XAI. It actually got more votes for than against.
Interesting. So shareholders are keen on that linkage.
It suggests some interest, yeah. Since it was non-binding, the board just has to look at it and decide the next steps. But crucially, another proposal, one that would have eliminated certain supermajority voting requirements, that one failed to pass.
Why is that failure important? What does it mean for shareholders?
Well, getting rid of those supermajority rules would have made it easier for the board, maybe influenced by the CEO with his potentially larger stake, to push through really big changes, like changes to the company structure. Because it failed, it keeps stronger checks and balances in place. You still need a broad consensus for major shifts, preventing a simple majority from overriding minority shareholder interests.
Got it. Okay, that makes sense. So let's move into section 2 then. This new book, as the CEO called it, the focus is clearly shifting to AI, energy, and robotics.
Right, and it all ties back to that new mission, sustainable abundance. They define that as basically allowing everyone to have all their needs met, goods, services, even advanced medical care, but doing it in a way that preserves the environment, avoids ecological destruction.
It's a grand vision, and the absolute centerpiece of this whole idea seems to be Optimus, the humanoid robot.
Definitely. The CEO made this extraordinary claim that Optimus will be the biggest product of all time by far. Bigger even than cell phones in terms of impact.
Bigger than cell phones, wow.
Yeah, the concept is basically that every human will eventually want a personal robot, like an R2-D2 or a C-3PO kind of an assistant. But what's really fascinating, or maybe controversial, is the societal claim attached to it.
Well, that...
He basically argued that Optimus is the only way to eliminate poverty globally and provide amazing medical care for everyone. He even claimed the robot will eventually perform surgery with precision beyond any human surgeon.
Whoa. Okay, that's a massive claim. Saying a robot is the only path to ending poverty and revolutionizing healthcare, that's not just selling a product, that's selling a whole philosophy.
It absolutely is. It's deeply provocative. A robot army is the key to universal wealth.
So how do they plan to actually do it? What's their supposed advantage here? Why Tesla?
Well, they believe they're uniquely positioned because they claim to have already mastered the 3 essential and very difficult components. First, advanced hand engineering, for delicate manipulation. Second, real-world AI software, which they've largely developed through the full self-driving program. And third, their proven ability for high-volume, low-cost manufacturing.
Right, the manufacturing piece is key.
Crucial. They plan to start high-volume production with a dedicated 1 million unit line, probably in Fremont initially. And they estimate the production cost could eventually get down to around $20,000 per robot in today's dollars.
$20,000 for a humanoid robot.
And what about the timeline? When might we actually see these things?
Well, the timeline is characteristically aggressive. They're saying Optimus version 3 production starts next year, then annual significant upgrades. V4 in 2027, V5 in 2028. This rapid iteration is absolutely essential if they're going to hit those performance milestones for the pay package.
Which neatly brings us back to autonomy, right? Section 3.
Yeah.
Because the Optimus vision, it relies on having near-perfect real-world AI. And that brings us back to the AI engine they've already been building for years, full self-driving.
Exactly. The FSD system is the foundation.
So use this analogy from the sources. The Model Y, as the Puss in Boots of cars, looks normal, but it's secretly an intelligent robot.
Yeah.
What did they share about FSD's current progress? Safety metrics, upcoming targets. They put out some pretty compelling safety data. They said the global fleet had just 1 crash for every 6.8 million miles driven with autopilot or FSD engaged. They claim this makes their system about 10 times safer than the average human driver in the U.S.
10 times safer. That's the basis for the next leap, then.
That's the argument. And this is where it gets, well, really interesting, maybe even a bit controversial. On the functionality side, the target for FSD version 14.3, which is coming up, is incredibly ambitious. They're aiming for a system where users can essentially fall asleep and wake up at your destination.
Fall asleep? Seriously?
That's the claim. The CEO even suggested they might soon allow users to text and drive legally while FSD is active, arguing that people are currently turning FSD off to text, which is less safe.
Hang on, that sounds like a complete reversal of decades of road safety messaging. They're saying the human is the liability, so let the robot drive and you can text.
That's precisely the implication. They're arguing the system is becoming so reliable that taking the human out of the loop for monitoring actually makes things safer. Functionally, it redefines the legal and technical role of the driver.
That has huge regulatory implications, surely. What did they say about getting this approved?
Yeah, the regulatory hurdles are still immense. The CEO mentioned the difficulties mostly in Europe, describing those approval processes as feeling like something out of Franz Kafka, bureaucratic nightmares. But interestingly, he expressed quite a bit of optimism about getting full approval in China, maybe around February or March of next year.
China approval would be massive.
Okay, and in parallel with improving FSD in existing cars, they're also building the dedicated robotaxi, the cybercab. Yes, the purpose-built autonomous vehicle. No pedals, no steering wheel, just designed for autonomous ride-hailing.
And the timeline for that?
Production is slated to start right there in the Texas factory in April of next year, so quite soon. The whole vehicle is optimized for the lowest possible cost per mile. They're aiming for under 20 cents, which would drastically undercut current ride-sharing costs.
How do they get the cost down that low?
A lot of it is about the production system itself. They're aiming for a truly mind-boggling 10-second cycle time per vehicle off the line. That's radically faster than traditional car manufacturing.
10 seconds per car.
Okay.
And speaking of manufacturing, achieving more cars, robots, cybercabs requires a massive increase in overall production, right? What are the targets?
Yeah, the targets are, let's just say, extremely ambitious. They want to increase total vehicle production by about 50% by the end of next year. That would put their annualized exit rate somewhere between 2.6 and 2.7 million vehicles.
And longer term?
The aspirational goals keep climbing. They're talking about maybe 4 million vehicles annualized by the end of 2027, and then hitting 5 million annually by the end of 2028.
Wow. Okay. So to hit those kinds of numbers, whether it's cars or robots, they need massive amounts of two key things the CEO flagged as potential bottlenecks: chips and electricity. Which takes us to Section 4. The huge infrastructure bets they might have to make.
Exactly. The CEO was very direct about this. The two big limiting factors for growth are chips and electricity. On the chip front, Tesla is already designing its own specialized AI chip, the AI5.
What's special about their chip?
Well, it's optimized specifically for their AI software stack. Crucially, it uses an integer-based system, not floating point like many GPUs. They claim this approach uses about 1/3 the power and costs less than 10% of comparable chips for the same AI inference performance. Power efficiency is key when you're talking about millions of vehicles and robots.
Okay, so they design their own chips, but they still need someone to make them, right?
Right, and even with their custom design, they seem to believe that current suppliers, giants like TSMC and Samsung, simply won't be able to produce enough chips at the scale Tesla thinks it will need.
So what's the solution? This is where that terafab idea comes in.
This is where the scale gets truly immense. The CEO basically hinted that they might need to build their own chip factories, what he called a Tesla terafab.
A terafab? What does that even mean in practical terms? Are they seriously considering becoming a massive chip manufacturer themselves?
It seems like it. They're suggesting that no outside foundry will be able to meet the unique, massive computational demands of a future world running millions of Tesla robots and self-driving cars simultaneously. A terafab, as envisioned, would be a gigantic facility potentially capable of anywhere from 100,000 to maybe even 1 million wafer starts per month.
That's an incredible scale. It's like saying the computing bottleneck is so severe they might have to vertically integrate chip manufacturing on a level almost no other single company does, going way beyond just being a car company.
It's moving towards being a core infrastructure provider, almost out of necessity, according to their vision.
Okay. And the second bottleneck, energy and batteries.
On the energy side, their storage business is already growing fast. They deployed 31 GWh of battery storage in 2024, which was double the previous year. And they're making huge infrastructure investments there too, building the biggest lithium refinery outside of China down in South Texas, plus their own cathode factory.
But weren't there some challenges mentioned, particularly with new battery manufacturing techniques?
Yes, they were quite candid that the dry cathode manufacturing method turned out to be a lot harder than we thought.
Yeah.
That's significant because the dry method promises cheaper, faster battery production by eliminating costly and toxic solvents. But actually scaling up that complex process is proving to be a major technical hurdle.
Right. And we also need to touch on some of the headwinds they're facing right now. This huge vision, this massive vote of confidence, it's all happening while the company is dealing with some real challenges, isn't it?
Absolutely. The sources confirmed that vehicle sales actually fell pretty sharply, more than 13% in the first half of 2025. That's a significant downturn.
And there were concerns about the CEO's focus being split.
Yes, there's been some academic work mentioned in an NBER paper suggesting that the CEO's time spent on other major ventures like running the Department of Government Efficiency, developing XAI, and perhaps some of his political activities might have negatively impacted Tesla sales among some customer groups.
And the pay package doesn't restrict those outside activities?
No, it explicitly puts no limits on his external focus or political speech. So the company, or at least the shareholders who voted yes, are effectively betting that his involvement in those other areas is ultimately a net positive, or at least not detrimental enough to derail this long-term plan.
Okay, so as we start to wrap up this deep dive, let's try and summarize the really big picture here. If you had to boil it down, what are the three massive takeaways people should hold on to from this meeting?
Okay, three key things.
Mm-hmm.
First, despite significant institutional opposition, there was overwhelming shareholder support for this unprecedented, incredibly high-stakes, performance-driven pay package. That's a huge vote of confidence, or maybe a huge gamble, depending on your view.
Right, confidence in the vision. Second,
The fundamental strategic pivot. Tesla is explicitly reframing itself. It's not just an EV company anymore. It aims to be a dominant AI, energy, and robotics company, all built around this new mission of achieving sustainable abundance, largely through Optimus.
and third.
Third, just the sheer audacity of the timelines and scale. We're talking Cybercab launch next April, ramping up to 5 million vehicles a year by 2028, deploying millions of robots, and maybe even building their own massive chip fabs. The terafab idea. The ambition is just off the charts.
Okay, that covers the core strategy and the votes.
And before we get to our final thought, this feels like a good moment for our standard reminder. Everything we've talked about here, all the information and analysis, it's really just to help you understand the market and what these companies are doing. It is definitely not investment advice. Investing always carries risk, so please make sure you do your own thorough research or talk to a qualified financial professional before making any investment decisions.
Absolutely essential reminder. Okay, so for a final provocative thought to leave our listeners with, something that came up in the source material. What about the CEO's suggestion that long-term AI might actually be in charge, not humans?
Yeah, that was a pretty striking comment. If this whole pursuit of sustainable abundance relies so heavily on what he calls a robot army and requires Tesla to vertically integrate core infrastructure like chip manufacturing with these terafabs, does that fundamentally change who's actually in control? Does it reshape wealth distribution and human agency in ways we can't even really grasp today?
It's a huge philosophical question kind of buried inside a business strategy, isn't it? Definitely something to think about.
It gives us plenty to consider for the future, that's for sure.
Well, thank you for joining us for this deep dive into the Tesla shareholder meeting. We hope you enjoyed today's content, and we will see you on the next deep dive.